So good morning, everyone. My name is Julianne Pease with MACNY. I'm excited to facilitate this webinar this morning. Just some housekeeping rules, and then I'll introduce Brian. So Brian's going to go through his presentation, and then he'll reserve time for questions at the end. And then at that time, you're able to unmute yourself and ask a question, or if you'd like to send your question through the chat box, you're welcome to do that as well, and I'm happy to ask it. And if you'd like to use the chat box feature the entire time so that you don't have to hold on to your question, remember it till the end, you're welcome to send those in advance. And then I'll ask them to Brian at the end. So thank you very much for joining. Brian is with Danable & McKee. He's an audit partner with over 35 combined years of experience providing audit and accounting services to both private and publicly held domestic and foreign companies. He has extensive experience in a variety of industries, including manufacturing, cost accounting, retail, professional services, construction, fraud, and forensic examinations. He also specializes in audits of the controls of service organizations, internal audit outsourcing, and internal controls evaluation and consulting. He's been with Danable & McKee since 2006, and he's held senior financial management responsibilities in both domestic and international privately held and publicly traded entities involved in manufacturing, recycling, and commodities. And he began his professional career with a national public accounting firm overseeing audit engagements. So thank you, Brian, for being here with us today, and we're excited for your presentation, and I'll pass it over to you.
All right, Julianne. Hey, thank you very much, and thanks for the introduction. I didn't realize I'd been doing this that long. I feel like a very old man. And I guess letting the COVID-19 beard go white probably didn't help either. But anyway, during that period of time, we've definitely seen a lot, and we're going to try to impart a little bit of our knowledge to you this day. Hopefully some of it is helpful to you, and I'm not sure, depending on what you all have been through in either your professions or in your business backgrounds, you might have already come into contact with much of what I have to say here today. One of the things that is interesting to me in the fraud realm, and I've been a fraud examiner for a pretty good long period of time right now, both officially as a CFE, certified fraud examiner, but also just in the consequence of the general auditing profession. But I almost have said in every one of my presentations for all these years, whatever it is that I'm saying today, I've probably pretty much said the same thing many times in the past, and I expect that I'll probably be saying to people again many times in the future. And why is that? It's primarily because fraud prevention is a very difficult thing to prevent. That's just the way it is. It's a situation where there is something that you have that other people want, and be surprised the degree of effort that they go to break the law and to do bad things. And there's been a whole industry that has popped up around that to try to combat it and to help people in the business world be able to react to that. Some of that is reflected in the statistics that we'll talk about right now. I'll talk about that first. Actually, it's interesting, the Association of Certified Fraud Examiners National Conference is actually going on this week. Today is the third and final day of the conference. It's actually online this year. It's supposed to be held in Boston, but it's being done online this year. So I just have an update for the report to the nations that just came out. So we have some very recent statistics on occupational fraud and abuse. Kind of interesting to see how much has stayed the same as opposed to what has changed from prior years. We'll talk about that first. Then we'll go into talking a little bit about how you can manage fraud risk, things to be looking for, things to do that can be available to you in an effective fraud risk management program. We'll talk about the 5 principles of managing the risk of fraud. You know, a lot of these things you can find all over the place. They're very common concepts. The Association of Certified Fraud Examiners has laid them out in detail. There's many other companies out there that are in the business of doing fraud examination that aren't necessarily CPA firms, but they're risk management professionals in very different shapes and forms, and specializing perhaps in different industries that bring the principles to bear, and they're pretty much generally accepted principles of managing the risk of fraud, but they're good to talk about and to use as a tool in your toolbox, if you will, for how to treat best practices in your organization. And then we'll talk about a fraud risk assessment, which tends to help you take a look at where you stand in comparison to those best practices. And finally, after that, what I'd like to do, I know some of this is a little bit pro forma standard. You may have heard it before, but what I'd like to do is talk a little bit about a fraud engagement that we've done in the past year that kind of had some very good examples in it of things that were good takeaways that can help put a little bit of some of this stuff, which might be a bit dry, into a little bit more stark relief for you, and how to deal with certain of the results you might find. Okay, so that's what we'll start with right now. And let's talk a little bit first about the report to nation. This is a report that's commissioned by the American Certified Fraud, the Association of Certified Fraud Examiners, and they do it every several years. The most recent one was 2020, so it's usually looking at activity that's going on in the 1 or 2 year period prior to the year it's published. But this is all recent information. It's conducted by the ACFE. There were a little bit over 2,500 cases of fraud that were looked at. That's pretty consistent with how they've looked at it. And that encompassed, as you can see, about $3.5 million worth of damages. Interesting, the median loss per case of fraud and the typical number or percentage of firms that are involved and the amount of their revenue that they lose to fraud stayed pretty consistent over the last 10 or 15 years. The 125,000 and 5% numbers have stayed pretty consistent. Another statistic that's out here that's interesting, it's not on this slide, but one that we've seen stay almost exactly level for the last 15 or 20 years, is that fraud, how it's detected. Many people out in the world that look to auditors who certify financial statements are under the mistaken impression that certified financial audits reveal fraud. In fact, external audits only detect about 5% of fraud that takes place. The largest number of frauds and the most consequential ones are actually identified by whistleblowers or by tips. And that's consistently been the same over the years as well. So and that's, I think part of that may come from the misunderstanding of the purpose of an external financial statement audit, which is to primarily, well, actually, what it's designed to do is to determine whether the financial statements are fairly stated in accordance with generally accepted accounting principles accepted in the United States. An external audit is not designed for the purpose of detecting fraud. And I think any fraud examiner will tell you, and certainly any CPA who's been in the business will tell you, that there is no such thing as the ability to conclusively detect fraud. The number of schemes that are out there, the degree to which people will go, the complexities that are involved, make it at best a mitigation exercise, and the better your toolbox to put into place particular schemes and processes to try to prevent fraud, the better you'll be. So we're going to talk a little bit about that as we get through the slides here today. In the manufacturing industry in particular, manufacturers are the third most, in order, the industry that's the third with the most reported fraud cases. Well, that kind of makes you wonder then, what are number one and what are number two? Well, number one, I guess when you think about it, probably makes sense. It's the banking and financial community. I guess they probably have what most people want, which is, easy to understand. And then I guess the number two, when you think about it, is probably sensible too. It's government. Whatever you think of the government now or in the past, it's a very big organization. There's a lot of people there, and everybody has, there's a patchwork of practices involved, and it's just very, very difficult to manage. So it's understandable that there could be a lot of fraud going on there that takes a while to be uncovered, if ever. Hopefully it does, for the good of all of us. But as you can see, manufacturing companies were the victims of 185 of the 2,500 or so cases that had been identified. So there must have been a heck of a lot of cases in the financial industry and in government that were ahead of that. Corruption, the most common scheme, about half of the cases involve corruption, and other common fraud schemes include, as you see, these other particular means of it's mostly expense reports. Financial statement fraud is probably the least seen in terms of the number of cases, but by the consequence of who it's being perpetrated by, those people at the top with the ability to move forward without being detected is going to have the most dollar amount attached to each one of the instances. And again, those are also pretty consistent from year to year. And as you can see, more than half of the frauds, there you go, right? Accounting, upper management, personnel and operations. When we do a financial statement audit, there is an inherent risk or an overall company level risk that's always assumed in every audit that we do, that basically states that management override of internal accounting controls is a standard fraud risk. That's one standard fraud risk. The other is that revenue will be improperly recognized, that there's an incentive there on the part of management to inflate their revenue. Those are just two things by default that are assumed to be risks that you have to go through and plan for. I think that says a lot about what is happening out there in the world, and it's been like that. I mean, as long as we've been doing this kind of work. Typical fraud lasts about 14 months before it's detected, and again, if there's some fraud awareness training in there for employees, which we highly recommend as part of a fraud risk management program, that's going to help you have a channel through which those tips can be reported. And we'll talk about some of those means of doing that in the presentation. There are other things that you can do to target anti-fraud activities, or you can impose anti-fraud activities by having a good control system in place. And we'll talk about those as well. And you can have that as formal or as informal as you want, but everybody should be trying to do something to keep control over the risk that is inherent in their system. So let's talk about a fraud risk management program. There have been laws that have been enacted. I'll go through some of these because I want to get into some details in particular. These are kind of just overall arching thoughts here that apply. So there are laws in effect, but the thing is, there's really no guidance. There's no book that says specifically do this. If you're looking for a textbook, you can learn how to do your multiplication tables and your division tables. Do people even do that anymore? I don't know. I was talking with my son about that the other day. He's a history teacher, and he said he went through it, but maybe that was the last generation that did. I don't know. But those are nice because they're written down, they're easily understood. Fraud, something that somebody is taking care of it and trying to detect it, can be an art as much as a science. So what can we do to deter fraud in manufacturing? Some of those strategies are pretty basic, okay? Assess the robustness of your fraud risk management program elements. And if that comes as a question mark to you when I say do that, I guess, the question really goes back to, do you even have such a program in place? What does your company do as a policy within it to think about fraud? We again, when we do financial statement audits, one of the things that we do is we inquire of management, how do they address this? And many of them do, but it's a very informal kind of thing. It's nothing that's been committed to a structured manner. Do you perform a fraud risk assessment of the possible scenarios? Do you think, in essence, if somebody is going to, and this is a very valuable thing to do, if somebody is going to commit a fraud in this company, how are they going to do it? What are they going to get out of this company? Before I was with Danable and McKee, I spent 18 years in industry. I was in public accounting at two different stints, once in the 80s and then came back in the early 2000s. But I spent 18 years in private, and I was the CFO of a company which has extensive operations in South America and Latin America. And for about a 10-year period, we were going through a very extensive program of building facilities in Central America. And once we got our offices open and running, one of the things that we found, well, what we did was we tested We tested textiles, clothing, to industry standard to make sure that the production processes met the statement of requirements for the manufacturer when they're having done by many different subcontracted companies. And one of the things that we were doing testing on a lot was infants wear and young children's wear. And we were finding that all of a sudden we would go to do the tests and we go for the test samples and they were gone. And the reason why is because a lot of the employees were stealing the test samples because the economy was so distressed and the people were in such an economic state that they were desperate enough to do something like that. Interestingly enough, the other things that we saw was that we were finding toilet paper and coffee disappearing all the time for the same reason. And so as a result, one of our assessments was that I guess what we should do is start to lock those sort of things up and put them under a camera, which we did. A very simple example, it doesn't, you know, to a certain extent, it affected the business, not in a way perhaps that you might normally think when you think of a fraud risk assessment, but loss of value nevertheless. But there's also technology solutions that can be used as well, and things that you can monitor to be able to prevent and detect fraud. And we'll talk about a couple of those. The AICPA and the ACFE have put together a guide on managing the risk of fraud that's available to you. It's a kind of like one of the essential Bibles that defines the principles of fraud risk management. Very easy, you can find it out there on the internet, and there are 5 standard principles that are a part of that are pretty well known. And let's talk about a couple of those because these are things that in a best case should be present in your business to some extent, and you can kind of gauge yourself as we go through and read them along here right now. I'm just going to actually close this camera because it's kind of blocking my screen a little bit. Okay, the first is as a part of your governance structure, it's really a good idea to have a fraud management program. And depending on the size of the company, I mean, this is easy to say if we're talking about a larger company that has a lot of resources that can put together policies and procedures. And as we all know, and I mean, how many times have I come in to audit a company and I've asked, hey, where's your policy and procedure manual or where's your accounting manual? And the answer is, well, we really don't have one. We do it informally. We know what we do. We communicate internally, but we never really have written anything down. That may be great for you, for the people that are in place right now, but if you have turnover and you have to bring people in, you have people that are starting all over again from zero. And that's not just in the accounting policies and procedures, but it's also in terms of just what is your overall structure to protect the company and fraud risk. It does make sense to if you can in some way, even if it's a cheat sheet or some things that you actually write on an email and put them in draft and save them and print them out and kind of work a little bit over time. You should be trying, if possible, to commit to writing something that you can share with others to convey the expectations of the company as to how you feel about fraud risk and how you guys go about trying to assess that. That assessment should be on a periodic basis. Again, the way we normally see this, and with many of my clients, during what we'll do is we'll actually combine this with our planning meetings that we do with them for various programs during the course of the year or engagements we may be on, where we will just take a break and have a cup of coffee, or maybe if we're out of the golf course, say, hey, what have you guys talked about this during the year? Have you thought about what you're doing this year? I have a new client that just started doing a significant portion of business with Amazon this year, something they had never done before. They, had always done fantastic business, just out of their own warehouse and shipping. But they decided to start working more significantly with Amazon during the current year. It's been a very profitable enterprise for them. But one of the things that did was introduce a couple of risks that they had to learn how to deal with, one of which was having a significant amount of inventory held in an off-site warehouse. And so how would that be monitored? What would the activity be tracked like? Also, to the extent that it involved returns or warranty risk or things of that nature, how were those being dealt with? What did the company do to think about those things and decide how to deal with them? You know, and what was the communication like between the Amazon infrastructure and their own, and how are they going to handle that to make sure that that this made sense for them? And they found that there's a significant amount of additional costs that were involved in dealing with Amazon, which was a risk for them financially that they had to monitor to make sure that the additional volume actually compensated for the smaller amount they made on each one of the sales. So, you know, that there's a couple of different elements of risk there, some financial, but certainly some fraud and the custodial risk of the products that needed to be taken into consideration. The third principle is those prevention techniques that avoid key risks. They should be established where feasible to mitigate the possibility of damage. So this basically means, as a result of going through and identifying what could go wrong, you know, where could companies steal from me? We have another client in our firm that their primary business is dealing gold and precious metals. They also deal with rare coins, things of that nature. So it's obvious that their inventory, I guess we would say, is a high pilferage risk. Maybe a lot more than infantware, and certainly more consequential from a dollar standpoint. So, you know, what is in place? You know, do you have, you know, constant physical inventorying of it to make sure that it's all there each day? Do you have cameras monitoring the storage room? Do you have controlled access, for perhaps with key cards, to get in and out of where it is? Do you have a specific identification inventory where the items are inventoried item by item? So that each item is sold, it's identified what should be left in inventory, and you can identify what's there. You know, is there adequate insurance on the business? I mean, when you go away from the business at night, people know by looking at the sign what this place does. I mean, that puts it at risk just because of who they are. You know, there's obvious things like that, that this principle number 3, prevention techniques to avoid potential key fraud risk events, that's the kind of thing that we're talking about. Detection techniques should be established to uncover fraud events in case preventative measures fail or unmitigated risks are realized. Again, if some of these techniques that you put in place can actually provide some of that detection technique, if somebody's going to try to break in and steal your inventory, presumably you've got a camera that you can go back to and you can identify who that is. You know, there's a couple of years ago, one other story that's kind of telling as well. I don't know how many of you are familiar with East Syracuse Chevrolet over on Bridge Street, but you'll notice that there are large gates. It's a pretty open layout over there, but there's pretty large gates. And on the weekends and evenings, off hours, you can't get in there. That's not the case. Many, many years ago, you used to be able to go and drive around in there, go in and look at all the cars any time of day or night, whenever you wanted to. And then all of a sudden there were gates on there. And that occurred because at one point, there was a car ring that was going in and had gone in there with flatbed trailers and started stealing cars overnight. And I'm not sure exactly what they were taking. The word I thought I had heard was they preferred Corvettes. But as a result of that, and I would assume from you know, discussions with their insurance company that at the very least, putting gates in there so people don't have free roam to get in there was one of the detection techniques, actually in this case now a prevention technique established to keep those fraud events that were detected early by their cameras from continuing to occur. Some interesting local stories though, to be sure. So again, a reporting process is hopefully going to be in place to solicit input on potential fraud. One of the best ways of doing that is a fraud hotline. Fraud hotlines are easy to come by. If you go and you search on the internet, you can key the term in and you'll find many places where you can get a fraud hotline where you can publicize it within your firm, put up posters, send it out with your human resources information if need be, and publicize that so that people who see any wrongdoing or an issue that they feel may need to be reported can report that in a confidential manner. And you know, one of the other things that you would have as part of your organization's governance structure would be some kind of a compliance program with a compliance officer. Again, it doesn't have to be super sophisticated, but the most important part is that you've thought about it, that you have something in place and a means where, you know, your employees can communicate. Okay. So let's get through some of these issues here, some of the elements, roles and responsibilities. Again, these are all things that are part of the elements. As you can see, we've talked about a few of them: reporting procedures and whistleblower protection, how you investigate, what kind of corrective action and QA and continuous monitoring you have in place. Do you do a fraud risk assessment? That's actually an engagement that we do as a firm. We are hired to do that. That's one of our specialties. It's a custom type program, and we basically have to work a lot with the individual companies to tailor that to make it most work best. But I think it's a very rewarding experience for everybody. It's a very educational and enlightening one. And in that risk assessment, we identify the areas where, as we said before, fraud could occur. Where could people steal money? Where can people take value out of the business, and who might commit those acts? The company's size determines the complexity and the degree to which it's been structured. It can be a very simple process for a smaller company. It doesn't have to be very, very sophisticated. It can start by just going through all of the internal controls in each of the key areas in your firm. As we said, in the terms of the company that is selling gold, obviously the inventory area controls will be very closely examined, as would the cash controls, and the background checks on key employees who are in finance and inventory control. I think you can see how those right away make sense in your mind. That's the way that you want to be thinking about these things. We identify where the risks are in the organization. Again, some of these things are very wordy, and I apologize for that. Some of this is standardized stuff, which I think conveys the meaning we're trying to get at, perhaps in a very, very deep level of detail, but it touches on all of the particular aspects of assessment of the risk that you want to take into consideration. So it acts as a good checklist for you to go through in terms of making sure that you've thought of all the areas that are important. Where could things go wrong? What's the likelihood? What kind of mitigating controls do we have in place in the business, if any at all, that can prevent those risks from doing harm to the company? So think bad. What's the worst that can happen? And could it happen? And if it did, how bad would it be? What would happen to us? And we're going to go through some of that in a second with this case I want to get to and show you. When you identify the space, or the gaps, as they say, between what risks exist and what kind of loss could be incurred, and what kind of control structure do I have in place to or do I need to put in place to mitigate that risk? There's a cost-benefit analysis, certainly. And the question is how can that be done for the most attractive cost, given the risk that's involved? Some of the things that are areas that you're going to be looking at: methods of fraud and the flags that come along with it. Corruption. We see this more in government. Obviously, there's certainly corruption in business, and certain industries tend to be more susceptible to that than others. Probably the one that comes to mind most often is the construction industry, where we have a lot of situations where you have a lot of companies out there that are competing for few jobs, and the objective is to get it at all costs. And sometimes there's some unsavory practices that are involved in getting some of these bids and awards and having a leg up, or insider deals that may be the case. And that's kind of what we see: bribery, illegal gratuities, conflicts of interest between some of the people. And you'll see here some of the red flags that may indicate that some of those things occur. These are things that if you are in the construction industry, if you're in finance and you see some of these things going on, they might indicate to you there's something that you should probably be looking into. And these are certainly also areas that you would want to be able to address in your fraud risk assessment. Okay, fraudulent disbursements. This is very common. Payments outside the accounting system, unusual payment patterns. I've had several fraud examinations over the course of the years where we've had people create fictitious companies and cut checks to themselves, creating purchase orders and creating invoices on their own computer, and then having the accounts payable system pay them. And if you don't have the proper controls in place, that's something very, very common. The other thing is overbuying, and then having the refund go back to the point where the value of the refund goes into the hand of the perpetrator who created the excess order. That is something that we see quite a bit as well. So these are all things that, again, this is very real world kind of stuff. Fraudulent financial statements. We saw this really, really well in the early 2000s. We were dealing with Enron and WorldCom, all those gigantic frauds that ended up creating all of the new financial standards and internal control standards to try to mitigate some of these risks. Again, asset overstatements, revenue overstatements, liabilities understatements, trying to make the financial statements look as good as possible, perhaps in the public realm to be able to keep the stock price up, or in the private realm for dealing with bankers and to pass your debt covenants, to be able to get through one more year until hopefully nobody undercovers that some of the assets have been stolen. Detecting fraud through technology is obviously a very, very important part of your risk assessment program. Depending on the size of the company, you may be very sophisticated, you may not. Not everybody runs SAP and Oracle. I mean, we have a couple of companies that do. The companies that are sophisticated enough that are going to be running a Oracle or an SAP or that kind of a ERP system are generally pretty well staffed up and have a pretty robust internal control structure. And as a consequence, and most of the time, I'm not saying always, but generally their risk assessment and fraud prevention is in pretty good shape. But that's not necessarily always the case. And we have had large companies that we've worked on that have had pretty basic frauds on it. Most manufacturing organizations need to do something. They need to have something that combines not only the system-based controls, but manual and people-based controls as well, to be able to try to eliminate some of the risk that's in the system inherently. So as we said, some of the smaller companies, I think you're going to see segregation of duties is probably the most often relied upon control, but that doesn't always necessarily work by itself, depending on judging by the number of collusion schemes I've seen in our practice over the course of the years, there's a lot of, especially in small companies where a few number of people handle a large number of duties. This is especially true in the payroll area, where you have one individual who's your accounting manager, is also your payroll manager, who puts in the time cards into the payroll system after they've been delivered, is responsible for changing pay rates, is responsible for putting the bonuses or the changes to all kinds of deductions and things like that, has control over the bank deposits. I mean, when you put so many responsibilities into the hands of one individual person, that's a recipe for disaster. And the question that has come to me a lot was, hey, Brian, I understand what you're saying, and this is all great. I'd like to be able to do that, but you know what? It's only me and my accounting manager. What am I going to do? And on top of that, that person may not necessarily understand finance that well. The person may understand their business very well and how to make money in it and their industry, but the accounting stuff is really something that I've kind of got over there to the accounting person. They tell me what the results are. Well, there are things you can do. You can, one of the things I recommend the most is look at the bank statement every month. Have the bank statement come to you, look at it yourself, kind of come to you directly, and look at the activity on there and see if you see anything that looks unusual to you. Same thing with credit card statements, especially if you have corporate credit cards. Believe me, okay, no matter how much time it takes, you have no idea how much of a benefit that is in fraud prevention. Why? Because you may not necessarily know exactly what all the transactions are on there, but you're going to know if there's something that's really wrong on there. And the other thing is, that's even more important, the other people, you want them to know that you're looking at it. And that will be a very, very big preventative tool right there. Very, very important, especially in smaller and privately held companies where it's difficult to get that segregation of duties because so many duties are being done by one person. If the owner or top managers are involved, that will go a long way, long way. So there is techniques though and data analysis that are available no matter what your size. These are things that can be done by you and your company, things that you can look at. There's a lot of things that are little red flag areas that, you know, if you have familiarity with your system and you can get in there and look around, these are things that can provide you with the ability to detect potentially fraudulent transactions. And again, your financial professionals, no names here, can help you with these sort of things if they don't occur to you easily. And these are, again, this is a huge table, but I'm just going to kind of give this to you as an idea of all of those things that are available, okay, that can be looked at. And these are the three key areas, as we said before, in manufacturing. These are the three areas that you want to make sure that you're looking at or that you've been thinking about when you're in this, you know, what could go wrong, or if somebody does something to me, where are we going to get hit? And it's all in these three areas, right? It's in cash and inventory, because those are the things that people want. They certainly want cash. Inventory, certainly, if you're in a situation where you have a high, as I call it, a high pilferage or high desirability inventory. And then sales and accounts receivable, which, you know, is primarily the financial statements and the records being manipulated. And, you know, if you take a look at these, and again, you can see things that you can do or areas that you can look at that will help you, you know, look in some of these areas for things that might be wrong. And we're going to talk about some examples of this in my case study in just a minute. Concluding, I think what I'm just trying to say in this whole presentation is that what you should try to do, if you don't have the resources to go through this entire process to come up with this formal fraud risk management program, you actually can come up with a fraud risk management program, albeit more informally, if what you do is you do take the time to just sit down with your management team or the people in your group that have the knowledge of your business, and you kind of just kick it around and ask the question of, hey, you know, if you're going to steal, how would you do it here? And it doesn't mean that I think you're going to steal, but if you were, what would be the best way you could do it? And you'd be surprised on some of the things that we have found out. I have had, you know, employees come to me when I go around and we do audits in manufacturers, and we do a physical inventory observation. You know, one of the things that the auditors are doing when they're out there and they're looking at the items on the shelf and taking test counts is they're talking to people, and they're getting ideas from them, feedback from them to questions like that I will ask, for example, is like, you know, so how long have you worked here? How do you like working here? What kind of attitude do you get from your boss and management here? What do people think about the people that run this place? What do you think is wrong, or what would you improve if you could do it? If anybody was going to try and take something out of this place and screw around with this inventory, what do you think would be the way that it would happen? You know, these are the kind of questions that I ask, and you'd be surprised how honest people are. And I've had some of them tell me, you know, people could back up a truck to this loading dock and take this place clean out of here and go out with wheelbarrows of cash out the back door, and I'm not sure anybody would know what was going on. And I've had somebody say it to me exactly like that. And you better believe that was a company that we had a big talk with management about their risk management program. They were unbelievably candid, but there was a lot of other underlying issues in that company going on. But, you know, like I said, there are things that you'll hear that sometimes are quite surprising. And I think, you know, it was very helpful to management that we talked to them about the fact that they had an issue on the floor, for better or worse. But let's talk a little bit about a very, actually turned out to be a very far-reaching and comprehensive fraud engagement that we did over the past couple of years here. And I like to use this one because I think it had so many different examples of things that could be done that it'll kind of give you a little bit of an idea of the things that we see, and also some of the things that we recommended and that the management has put into place to try to mitigate their fraud risk. And then we'll go into some questions here. I got a few minutes, but I'll take about 10 minutes or so to go through this with you. The background on this engagement was, this is a manufacturing company in the Northeast, and they've been around for a long, long time, and it's a very mature company, and the management is very experienced. There's a lot of growth and a fair number of acquisitions within the last 10 or 15 years. I wouldn't say inordinately so, but the characteristic of the company is that it's owner run. They're in the first generation, which is about to retire. There's other family members that are involved. The financial management is very strong, very experienced, but they've had a lot of turnover. They have, just by nature of the business, there's a CFO who's been there for a long, long time. The controller has been there for a long, long time, but is not a publicly, not a CPA. And there is quite a bit of turnover at the clerk level. They go through people every couple of years. Okay, so when I see that, the first thing that I see is, okay, well, this is a company where we're going to have to, by nature of it. So we were talking before about inherent risk, right? The inherent risk in fraud in this kind of a structure is that because you have a lot of turnover in the business, you have to go through a rather structured and repetitive process of repeating best practices to all your people to make sure that they stick, right? Because you could do it once, but then if the majority of your people leave and you bring new people in, they're cut loose. They aren't really aware of your best practices or how you want to run the business. The one thing that you as management want to do in your business is make all of your employees absolutely aware of how you want the business run, because they look to you, the people at the top, as the example of how the business is to be run. If you run the business loose, if you're gone all the time, if when you're there you don't talk to anybody, you don't interact with people, you don't pass down your values, they're not going to be there. They're not going to bring, I mean, they're not going to try harder than you. Okay, so the main thing is tone at the top. It's establishing the tone at the top, and this business felt that they had done that. And by and large, I think I agreed with that, but I just don't think that, I think that their values were right, but I think that perhaps their communication structure wasn't that robust, and it hadn't been happening well enough. So what ended up happening with the company was they found that they had a lot of their inventory stolen, which was very high dollar value stuff. And they also found that one of their employees had been stealing money through online payment processors. This was something that in their fraud risk assessment had never come up earlier, meaning that it had never been disclosed or discussed with anybody that over the period of time they had begun to do more and more business over the internet. It wasn't that they were doing business on online platforms like, eBay or so forth, but they were selling items, and they were being paid for through PayPal and through some of the other payment processing services that are online. Okay, so that means that at some point the company set up a profile for PayPal and gave certain people access to it and password access and so forth. Okay, so what had happened? Well, over time, the people that had the credentials left the company, but guess what? Nobody changed the password IDs or the credentials. Red flag number one, right? What's the potential risk there? Do I even need to explain that to you? Okay. This is one of the reasons why we shut off email for employees that terminate. One of the reasons why we don't let them go back to their office right after they're terminated. We walk them right out the door. We don't want to have people going back into the system, but we certainly don't want to have people with the ability to get into our cash, after they leave the firm. Okay, so that's one thing. So we went back with them, and we got a understanding of the nature of the transactions and the sequence of events that occurred between the terminated employees and management. And then we did a forensic exploration and examination of all the source documents for the suspicious or unauthorized transactions. We went through all of their bank accounts, not just the online accounts. We went through all the regular bank accounts too, because guess what? It could have happened over there too, and that just hadn't been detected. Okay. This ended up leading us through American Express. We ended up going through Square. We went through different kinds of credit card providers that they had, Stripe, Shopify. There was all of these different online Venmo transactions were involved, PayPal. We spent a long period of time going through and looking at all these transactions. And as a result, we found that, we actually did identify the individuals that were involved. One of them admitted it, but we had to have the evidence in place first to be able to present that to them. As fraud examiners, we're not allowed to accuse anybody of fraud. I can't say to someone, you stole, or that you committed fraud. According to our ethics, we can't do that. What we merely do is to identify all of the factors and to explain the findings, and we can provide our recommendations. And generally, the report that we produce will be a tool for either the client's attorneys or law enforcement, depending on who's involved, to be able to use as a source document. And they may want to do further investigation, but this is a means for us at least to get an initial picture together that narrates the what's happened. And then we provide litigation support usually as well, somewhere down the road with that. But again, so we completed the engagement that identified all this, and some of the things that we recommended, and this will give you an idea of some of the things now that this is really, in the end, we kind of ended up doing their fraud risk assessment. And again, this is not the way you want to do it, right? Because it happened after the horse is out of the barn. But some of the things that we've found and were our recommendations is, first of all, reconsider access permissions to these online transaction processing and password protection permissions. How often you change them, who you give them out to, who is the actual one that has control over all this. Don't let it be in the hands of people down below and potentially people that are going to leave, and then you don't have any control over it unless you go in and get in there and change it. Restrict or eliminate the availability of cash advance features on corporate credit card programs. Very important. There should be no cash advance features on corporate credit cards. Sometimes companies aren't even aware that those features are there. You find out sometimes after the fact, and sometimes you can get it back. Sometimes you can't. It depends. But be very mindful of, and talk with, if you have a credit card program, talk with your provider and understand exactly what's available on there. Okay. Reconciliation of your PayPal accounts to your general ledger on a timely basis. Do it every single month. PayPal, any of those providers, they should be treated just like banks. If there's money out there, make sure it reconciles to the general ledger. And if there's a reason it's not an agreement, you understand what those transactions are, because something could have gone wrong. Somebody could have gotten in there and stolen something. I probably had about 15 bullets under that one item with things to do in terms of procedures to follow to go in and change their activities. As we said, periodic password changes should be forced to all of these online payment processors. Here's another big one, and consider evaluating your employee crime and theft insurance coverage. That's something that every manufacturer should do. Do you even have it in place? Are you covered if somebody steals? You want to make sure that you've got some coverage in place. It's not very expensive. It's not as expensive as you would think. And it's even less expensive if you can demonstrate to the provider that you have a fraud risk management program documented in writing. Wonder how we figured that out. Establish a more formalized policy and procedure surrounding the use of corporate credit cards. We talked about, monitoring the access or restricting the access and being careful on cash advances. But do you even have a policy and procedure? Do you give credit cards to everybody? I guess I won't even go into some of the stories I have on corporate credit cards. Except for the fact, I guess there's one that I do have to say, that I had a situation where I had a manager in one office in New Jersey that was not only using the petty cash account in the business as his own ATM, but had two girlfriends, and his corporate credit card was littered with purchases from many different companies, and she must have looked extremely beautiful because he spent a lot of money on clothing, and shoes. And I asked him for where the receipts were on that and how they were company transactions. And he responded to me by just saying, you know, Brian, I think what I'm going to just do is let me turn in my corporate credit card. Would that be okay? So we had to talk to management anyway, but that was okay. Inventory control. Counting inventory the most subject to theft the most often. Arranging for employees from departments of companies different from that being counted to perform the inventory counts, right? Have people from different parts of the business do the inventory counts. Don't have the people that are responsible for keeping track of the inventory count their own section. Not a good idea. You know, again, segregation of duties in that aspect is as well. Inventory and high pilferage items, inventory them by serial number. Record the serial numbers at the time of sale. If you have bulldozers, you have to have an inventory, bulldozer 1, 2, 3, and 4. If you go out there at the end of the month and now you only have bulldozer 1, 2, and 4, I hope 3 has a sale transaction to go along with it during the course of the month. Otherwise, you better watch. You better look at your camera tape to see if somebody took it in the middle of the night. Store high pilferage items in a secure locked area. Install security cameras to monitor the area where the inventory is stored. Access to the equipment should be restricted to appropriate members of management only to avoid defeat of monitoring and recording systems. In one situation we were involved in, we saw that a company had put cameras and recording devices on their inventory room, and then they had a fraud, and we went to look at the tape. It wasn't running. No tape. Got to monitor it, see if it works. Install a fraud hotline. We talked about that. You can look online to find information on that. Obviously, segregation of duties, capacity and staffing in the financial department. You know, the controller in companies that we worked at, very, very busy guy. Make sure that you're realistic about how much work you're asking these people to do, whether they've got the right staff. Sometimes they'll suffer in silence. They may have people working for them, but they may be less than fully trained for their work. The controller may be so busy, he doesn't have time to train the people, and that he's actually doing more work even though you think that there's enough people in the department. Have them come in every once in a while and give you an honest assessment, or speak with your CPAs who are coming in hopefully and looking at your people and get an assessment as to how's this guy doing? Is he overloaded? Is he competent? Can he really do the work that we've hired him to do? If you don't have the ability to do that really totally on yourself, there's nothing wrong with asking for that kind of an assessment. You know, so that's just an example of what we kind of came away with and takeaways just on that one particular engagement. And I think, you know, again, some of those are self-explanatory, but it's rather typical of manufacturing fraud. So with that, I can take some questions, I think, Julianne. I'm not sure exactly how to go about doing this, but.
Thanks so much, Brian. That was great. I learned a lot. Thank you very much. It looked like on page 27, there was no bullet points. Did you mean, or did you just mean to talk through that page?
I was just talking through that. Yep.
Okay. Okay. But yeah, so if anyone has questions, you're welcome to unmute your line and ask Brian yourself if you'd like. Otherwise, if you would like to send it through the chat box to me, I can ask it as well. Whatever is easier for you, if you have any questions.
You know, the real question also is going to be, it's going to be interesting to see what the COVID-19 thing does from a fraud standpoint. There's actually a session I'm sitting in on this morning. Apparently people are finding all new ways to steal money because of the COVID-19 issue. And part of it is frauds being perpetrated on this PPP program. So I expect to talk a little bit more about that later this fall when we get into our fraud conference, just as a teaser for the future.
Yeah, I'm sure it'll be very interesting. You are correct. See what happens. There's just a few comments. Okay, we do have a question. How do you advise companies to get started in making a fraud plan for their companies? Do you think that they can do it themselves, or do you advise using a specialist or a CPA?
Well, that's a good question. I think, you know, Obviously the question is, it depends on the size of your company and the fraud risk structure. I think that the way that you answer that question is to initially just have a discussion to talk through the subject, to get a framework of, in mind of exactly what is it that you're doing as a company and what are the particular aspects that you're concerned about. As I said before, it's a very custom type process, but it doesn't take a very long period of time to identify where the risk areas can be. And a lot of times, I hate to say this, but the people or the companies that come forward to us most regularly to ask that kind of question are companies that either have experienced fraud or are concerned that it's going on. And if that's the case, you want to be able to have that discussion right away. And we can try to see if we can talk it through a little bit more. But the answer is that it can be a collaborative process. It could be, generally it involves us working together in all cases for us to be able to bring thoughts out from you, but then work with your people to help start documenting what it is that you're doing with your controls right now. And then when we look at that, we can come back and do a critique on it and identify where we think there might be some risks and perhaps some holes, and two, areas that can be improved, to bring it the next level along. And so we're kind of doing this sort of thing. You do it, then we come in, and then we move it up here, and then you come up to that, and then take it forward. And it's a continuous improvement kind of project.
Thank you.